All right, let's talk about major changes that we've seen over the last 3 to 4 months with banking institutions on both the personal credit side and the business credit side. So if you have a credit aspiration coming up, you probably want to watch this video. All right, let's dive into it. All right, so just quick impromptu video here that I wanted to share some things that we've noticed because I think it's going to affect you with your credit aspiration. And so, yeah, I wanted to share that on both the personal and the business side. So let's start on the personal side. Things that I'm noticing now as banks are tightening up, as interest rates are staying where they are and not getting cut, and nothing dramatic is happening there, right? So banks are gonna have to pivot, and banks have a ton of unrealized losses, big banks, small banks, etc. So on the big bank front, what we're noticing is that they're starting to reward consistent behavior over time. So if you've had a lower utilization over a longer period of time, if you've shown consistent steady income over a longer period of time, if your credit profile has pretty much stayed around the same rating or block of credit score number-wise, you're getting rewarded. And all this stuff is like, yeah, duh. But you got to understand is that in good times and especially 0% interest rate times, it didn't really matter as much as it does now. It seems to really cranked up a notch in terms of how much it matters. And in credit unions, they're tightening up in their own ways. So again, as we've really outlined in a lot of videos recently, is that the guy that can show over 100,000, over 300,000 is even better of stated income, he's gonna have a better time. They're gonna be offering him lines of credit, like personal loans, additional products, auto loans. They want to get that guy into the ecosystem. They want to give him all kinds of money, so that guy can go in there and get a whole lot more in terms of credit funding. They can give you upwards of $200,000-$300,000 in one go. I've now seen it. So that person with that kind of profile, 760, 750 and above, consistently over time with consistently lower utilization, below, I would even argue below 10%, but definitely below 30%, that person's gonna have an easier time right now. And so that's where they're specifically clamping down on. And what's great about a credit union is if they don't like a specific thing on your profile, they're gonna tell you. They usually don't hold back. When you call in and do reconsideration or recon, and you talk to an underwriter at that credit union, for the most part, they're gonna give you a pretty straight up answer. We've had now people go through and at certain credit unions get very specifics coming back in terms of like, hey, it's this one thing over here, or we didn't like your balance on this card over there, pay that down and then we'll approve you, that sort of thing. So it's definitely open in terms of, communicating with the credit unions. I feel like that's very good still, right? Like they're telling you exactly what they want to see. It's just they're tightening up in those ways, right? Big banks are tightening up in other ways. And who knows, if this continues to go on, we're already hearing rumors from some RMs, relationship managers, is that a lot of what you see right now is going to change. And so I don't want to put too much emphasis on this because I can't name who told me that, can't give you much information. So it just sounds like I'm pushing fear. So I don't want to do that. That said, is that it would make sense if rates continue to stay where they're at, what other options are big banks going to have but to start making somewhat of dramatic changes, right? So anyways, that's the personal side. Now let's jump into the business side and wrap up. So the biggest thing on the business side that we've seen is that a year ago, there was still not a lot of issues with going and getting a brand new business funded with somewhat of a large amount. If the personal looked good, they were willing to look past the fact that it's a brand new LLC or a brand new entity, still let you walk out of there with 50K, 100K and above, right? Especially if the personal looked really strong. The thing that we're seeing is starting to change and tighten up is the company's business bank account rating that they have. It's actually a scale of 1 to 5, believe it or not. Okay, so the bank rating, what does this actually mean? You actually are establishing a bank rating on the business side and it's based off of your balance. So let me go ahead and give it to you. I got it pulled up right here. So for example, minimum balance of $999 will rate you a high 3. $5,000 receives a mid 4 rate and $10,000 will give you a low 5, okay? You want to be between a low and a high 5 is what most of the business relationship managers or BRMs are telling us right now. So that means that they want to see active money coming in and out. They want to see what? An actual established business that's making money over $120,000 per year. So yes, that knocks out a lot of people who want to get going with a startup or they don't have a lot of history. And it definitely knocks out a lot of people that I think have been kind of skating through with, a so-so personal profile, still being able to get business credit. I think a lot of that's starting to tighten up and will continue to tighten up through the rest of this year. So that's what we're noticing on the business side is that business bank account rate rating between 1 and 5. So yeah, you want to be in the 5s for sure. And so that means that you're going to have to, have a business that's out there doing something. And that's going to be a struggle for a lot of people. So anyways, I just wanted to share this with you, give you this quick message. And if you've got Apps Freeze coming up this year, well, these are things that you want to consider. Thank you so much for watching. While you're here on the channel, take a couple of minutes, like, subscribe, comment, all those things help us tremendously. And it means a lot to us. So thank you so much. Watch some more videos. Be on the lookout. More coming soon. Thanks. Hey, you should subscribe. 60% of you are not subscribed yet. Right there. Okay, bye.